Fibonacci, the ancient math from the 13th century, which all of us traders now are using it to trade the markets. Crazy, right? So in this video, I'm going to show you exactly how to use Fibonacci with price action and avoid taking losses like this and this using the Fibonacci technique. Let's get right into it. So in this video, I'm going to talk about three main topics. What is Fibonacci? Why does it fail on you? And how do you combine it with price action trading? So first things first, what exactly is Fibonacci? So the Fibonacci actually originates from the Western world of specifically an Italian mathematician in the name of Leonardo of Pisa, otherwise also known as Fibonacci. So back in the 13th century, he discovered this mathematical sequence starting from 0, 1, 1, 2, 3, 5, 8, 13, 21, and so on, where each new number is the preceding of the previous two sum numbers. And then the famous discovery was he sees that this mathematical sequence appears in three branches all the way towards the spiral of galaxies to the proportion of human body and sunflower seeds. Crazy, right? But nowadays, we're not in the 13th century anymore. We have our computer, we have traders, and traders are using this same mathematical sequence in their trading. And the main way traders are using Fibonacci in their trading is to look for levels. However, now I'm going to show you a few classic examples of how traders would use it on the charts right now. So generally, traders follow these couple of steps. They will first look for a swing, and then they will put on the Fibonacci. Okay, just to show you what that looks like, I'm gonna take my Fibonacci and I'm gonna put it from the swing high here, this higher high point, and then drag it all the way towards this low before the pullback comes in. Now, what you can see, if you don't already know what Fibonacci is, it will have this sequence of levels, okay? And each level corresponds to a different figure, okay? Here in this case, it's 50%. What that means is this is the 50% point of this entire move. This is 38% of this entire move, 61, so on and so forth, okay? Now, if you're familiar with our concept of pullback trading, this essentially just means a discount for the bigger players to get in on the next move, okay? But let's get back to the classical way of using Fibonacci, which would be to start from the top and then take the Fibonacci and then drag it all the way towards the bottom and then just see if the Fibonacci sequence lines up with an SNR. Now, in this case, it does line up with this SNR, and then here we can see a move down. However, it's not as simple as that, because there will be a lot of times where it actually does not work. One main example would be this one here. If I put your attention to this area here, you would see the move, any level that is here gets completely destroyed by this move towards the upside. And this example would work on both the buys and the sells. So if we look further into the back here, there is a bigger level on the charts. For the buy position, we could pull our Fibonacci level from the lows all the way towards the high where the pullback begins. And as you can see here, right at 38%, things would start to move. Now, I'm sure the question you have right now is, wait, am I supposed to look at the 38%, the 50%, or the 61%? Which is the best number to use here? That's not something you want to consider because, again, these are not magical numbers. You want to combine this with proper price action analysis to make Fibonacci trading work, which is what we're gonna get into right away. So if you remember, one of the most important points that I just mentioned for a brief second earlier is this. The Fibonacci level is nothing but a gauge of a pullback, okay? So number one thing that you want to take into account when you're using Fibonacci trading is, do you first have a trend? That's where price action comes in. We want to use price action with Fibonacci. So knowing that Fibonacci is measuring a pullback, a discount of a trend, let's first visualize having a trend, okay? So now that, let's say we have a move up, okay? The next thing that we're trying to do is look for a pullback to join the move up. right? So if we put our Fibonacci from here to here, we may have the 38% coming in here, 50% here, 60% here, something like that, okay? But which one is the best level to choose? The best level to choose is going to depend on where do we have a strong breach. Now, breach is something we cover in the Mastering Price Action 2.0. But what that essentially means is, do we have a level prior that was holding ground and unable to push through, okay? So if you see what I've drawn here, this is a price point where every time buyers try to go up, it got pushed back down. Go up, push back down. Go up, push back down. But then finally, we breach through. If you have levels like this and it aligns with your Fibonacci level, that adds an additional confluence to that level. So this is what we are actually looking for. We're looking for more confirmation to tell us the Fibonacci level is going to hold. And then the final piece of the puzzle is understanding how the pullback is coming in. So if, let's say, price decides to just tank, no level is going to work, okay? We need to make sure as price is pulling back, momentum is also slowing down. If we see momentum is slowing down towards areas like this, again, that adds more confluence to the level and it helps us with our precision entry. Okay, so the three main things that we need here before even looking at Fibonacci is understanding, do we have the right price action? Do we have a good trend? Do we have a good breach? And do we have a slow pullback? Okay, so I want to show you a few examples where there isn't the three things we mentioned and how it would fail. Okay, so what we have here is the Aussie Swiss, and I see a strong move towards the upside. I'm gonna fib my levels from the bottom to the top here. Some of you guys may be wondering, hold on, can I use my fib from here? That's absolutely fine, okay? Because you can see either way I do it, if I do it here and I put it here, we do have this zone of SNR, okay? Around about 50%, there is also a breach here. Okay, we have price trying to move up prior, can't really go up, and then we went through. So out of the three things we talked about, yes, we do have a breach. Now, do we have a trend? Yes, we do have a trend, right? This is a strong move towards the upside. We have a couple higher highs, higher lows. It does look like it's an uptrending market, okay? So now two things is check. Final thing, do we have a slow pullback? Now, if we focus our attention on a pullback here, look at this first push to the downside. It looks fairly strong. Right? Slight little pullback. Look at the second push. Okay, it's still going strong, but let's play it out just to see. We have very strong buyers rejecting off around about the 50% area here. Let's give the sellers a few more goes. If it cannot make any more lower lows, that's going to be the sign that things are turning around. So if we move forward here, we can see each step along the way, sellers are still looking very strong. Now, if I keep moving further, things are just moving to the downside. So there is no sign whatsoever that things are trying to turn around, despite having a good trend, despite having a good breach. If the momentum of slowing down is not there, if there is no signs of buyers coming back at the SNR, at your Fibonacci level, it's just not going to be a trade that will work. Okay, and if we move forward here, we can see things continue to tank lower, okay? Now, I want to show you another example on Euro USD. Euro USD has similar features. We came out from this strong, huge range, okay? We have a strong trending market towards the downside. And if we take our Fibonacci and then from the top all the way towards the bottom, we have the 61%, which aligns with all these lows here, okay? So this is the breach that we were talking about, right? So now that we have our breach and we have sort of a trend going on, let's see if we get a slowdown on this move up. If we do get a slowdown and things are turning around, that's potentially a chance where we can try and get in. Now, if we play this forward, we see things just continue to go. So despite having those two things there, if we don't have a slowdown, there's really nothing we can do. Now, I want to show you two examples where all three things are present, where all three price actions are present, and let's see how they would perform. Okay. First things first, we have the Euro USD. We are on the 1 hour chart and we see a move towards the downside. We are breaching out of a range right here. If I take my Fibonacci and then put it from the top, drag it all the way towards the bottom, we see we have the 38% lining up with this low, we have the 50% lining up with this low. Not sure which one to take, so that's your first conundrum. Which level should I be looking at? Okay, to answer this question, you want to see how the pullback is pulling back. Is it pulling back slow and choppy into the level, or is it coming in hard and fast? Hard and fast could be good things in some places, but not on the charts. So let's mark out this area here. We know there could be a reaction taking place there, but let's see how is the pullback pulling back. So initially, things are looking very, very strong on the move up, very fast. Now, we stall for a while. Let's see what do we get next. Okay, we continue to make higher highs, but look at the following move here. It's much slower, right? Okay, we seem to hit this point and we seem to turn around. Now, strong move towards the upside, very, very slow. Now, the next move towards the upside is just 2 bars going up, very small candles, and then 1 red bar turning everything around. All right, so that's your first sign that tells you your Fibonacci level is reacting. You have all the price action here that tells you things are looking good. However, do not think that you have missed this trade, because what we generally do at Urban Forex is we would go down to a lower time frame to catch the precision entry. So in this case, I would go down to the 15-minute just to see if things are holding. Okay, so this is the huge reversal that we saw reacting off Fibonacci level. If price do hold here, like so, right, not really going anywhere, it's just holding grounds below this area, that's a sign that we can potentially get in. So let's try and hit a sell here and let's see how it goes. Okay, so I'm hitting the sells and let's put our short position here with a stop loss at the recent high, and then let's take it down to the recent low. Okay, so this is how we're going to be framing our trade. Let's go back to the 60-minute and let's see how does this trade perform. Okay, we're looking at a 2.58 hour trade. Let's see. 1 bar all the way towards target. Okay, so you can see by using price action, things can get very, very simple, and you can catch the turn very easily, right? You do not need to catch the absolute high here because that comes with a lot of risk. This is a much safer entry with a very good risk to reward. Now let's jump on to another one. Again, I have the Euro USD and I want to show you this pullback. Okay, so this is a downtrend that's happening on the Euro USD 1 hour time frame, and we want to look for a pullback to continue the sell. And in this case, we're going to use the Fibonacci to look for a pullback. So let's look at this example right here. I'm going to move the charts a little bit higher. Now, if we take the Fibonacci, take it from the high towards, and then drag it all the way towards the bottom, and then drag it all the way here, you will see there is a small little area here which lines up with the 38%, and then there is another one right here which lines up with the 61%. The question you probably have in mind is, which is the best level to trade then? Should I trade at the 38% or should I trade at 61%? Again, going back to the price action rule that we were speaking about, we need to make sure we're looking at Fibonacci levels, it lines up with a good, strong breach. So where did the breach happen? Look at this move down, rejected, okay? We hold for a bit, came down again, rejected, and then we have a move towards the downside. Now, I don't know about you, but this level looks much stronger than this level right here. So if I were to choose one of these two levels, it's gonna be level A as opposed to level B, okay? And what's level A? If you remember, level A is at 61%, okay? Now, if you see at 38%, this small level, despite it reacting, it didn't go anywhere, right? We see some reactions here, some reactions here, reactions here, but that's not gonna make money for our trade. We wanna see a move, strong move towards the downside, making lower. That's how we want to trade trends. If it's just reacting here and there, it's not gonna be worth our time, okay? So let's focus on the main level, which is at 61%, and let's mark our zone around that area, which would be right here, okay? I'm gonna remove all the levels here because we know where we're gonna be trading at. And let's see if we do get a pullback into that area. We move forward. It looks like we're trying to make new highs, but right now, barely any higher highs. Okay, still a lot of rejections. We have what it looks like a huge shooting star that's happening. If you guys are familiar with candlestick patterns, either way, based on the price action, is telling us things are looking very weak for the buy side, which is what we want because we want to look for a sell. Okay, we have very strong sellers taking out all the last 3 candles. Let's see what do we get next. Okay, sellers are still looking strong. What I'm gonna do next is same thing as what I did with the previous example. Gonna go to the 15-minute time frame just to see if things are holding. Okay, so this was the level we were looking at, and here is where I want to draw your attention to the price action. Now, if we read the buyers going up, we see a move up, slight pullback, move up, slight pullback. This third move here doesn't make any more higher highs. Okay, we have another pullback again. Doesn't make any higher highs, instead this time crashes right back down. And what is also happening here, we are crashing back into this range here. Now all of a sudden, this is telling you this could be a probe, and we're just holding here at the top of the range on the underside before launching towards the downside. If you see price action like this and it's reacting off a good breach area of a Fibonacci level, you really want to get in, okay? So what we can do, again, let's take a buy position on this trade and see how this performs. Okay, so we're gonna get in on this bar. Our stop loss do not need to be high because it has shown a lot of signs of sellers, and we're gonna take it down to the recent low. This right here, we're looking at a 2R trade. Okay, let's go back to the 60 and let's see how quickly this would perform. Okay, we see some holding here. Let's see if we get a launch, still holding in profit, and there we go. Okay, so you can use Fibonacci well in your trading if you understand the right context. Okay, so this is another example of how you can use price action with Fibonacci to really increase your win rate. So as you can see, Fibonacci trading is not just about plotting levels in the markets, because if that's all that traders are doing, my 3-year-old nephew can be a trader himself. You need to make sure that when we are looking at Fibonacci, we are also taking into account price action context. That's the best way to trade indicators like Fibonacci, combining it with price action. And if you want to learn more about price action, I suggest checking out the courses at urbanforex.com. Otherwise, I'll see you on the next one. Oh, hold on. Make sure to hit the like button, subscribe, and turn on the notification bell. Cheers. Peace out.